Just got stopped out on my short here during 38. I sold once above 24 and sold more above 31. Um, After 31, I thought we had three pushes up to the moving average. Bad high one at the moving average, so I sold above there. It was looking pretty good at 35. Um, so once we triggered below 35, second entry sell at the moving average, I tightened my stop above 32. Looks like it was a right call to tighten the stop there because we had a credible top and couldn't get the break lower. So I was expecting a second leg down from this. We might still get it, but it might come from higher. So that's unfortunate. Lost a little over 10 points there. Just sold a tick below the 48 high. Decent breakout 46, 48. But also a double bottom bull flag 36, 49. So for the bulls, it's a double bottom bull flag for a higher low major trend reversal above 49. Reasonable swing buy, but I think it's low probability. So I think we'll probably get below the 49 low. If we break strongly above the moving average, then I'll reconsider that. We tried to stay above the moving average on 38 and 45. So two attempts by the bulls to get above the moving average and failed twice. So I think the bear case is better for a test down here. So far, it's a swing sell for the bears below 46, and it's a swing buy for the bulls above 49. I think the bear case is better after this strong breakout. So far, staying below the moving average. So bulls who bought above 49, I think they'll exit on 51 if we try to get above the moving average one more time and fail. On the other hand, if we close above the moving average on 51, that'll be three consecutive bull bars, in which case I'll give up and exit the short. I used to buy these a lot, 49. If 49 closed on its high, I used to buy those for a swing, and I stopped doing it because it's below the moving average. And I often was exiting 2 bars later because we couldn't break above. So I thought instead of buying above 49, I should just wait until we break above the moving average and then look to buy. So I think right now the odds favor the bears protecting the moving average. So I don't think we'll get above it. So here's a really similar situation. I'm trying to move this out of the way. So right here, we had a double top, and then got a big breakout, pause, another big breakout, 37, and I bought above 36. And when we failed above the moving average, I exited the long, and that's where a lot of bears started to sell, when we failed again above the moving average. So this is like one of many examples where I used to buy that. It's definitely possible that we break strongly above, but the risk is small, because if we do close up here, then I'll lose 4 points. But if the bulls fail, then we could get down to test these lows here. So that's why I took it, knowing that it was just 1 bar away. If the bulls were strong, then I'd exit, and if the bulls failed, then I'd stay short. So closed 1 tick below the moving average. Not as drastic as this example, the failed attempt up. So makes it a tougher read. I think we'll probably get back down to the 48 high because I think that was reasonable to sell. So even if we get one more bull bar, I think we'll come back down and test it. But 3 bull bodies now, not as bearish as it looked on 48. So 53 tested my break-even price. After the 4 bars without a bear body, I considered exiting back in my break-even price at the 48 high. Couldn't make up my mind, and then it just raced up and closed above the moving average. My stop's definitely above 39, but I just don't know if I should. I mean, it's close enough to my stop now that I'll probably just leave it there. But yeah, that was poorly managed. I just couldn't make up my mind there. I should have just, after the 4 bars up, it was definitely not what I wanted to see. I should have exited break even or on the close of 53. So I stopped out there, completely mismanaged that one. Pretty upset about that.